escalating trade war between the U.S. and China has been a source of global anxiety, but there might be a glimmer of hope on the horizon. Could a face-to-face meeting between President Trump and President Xi Jinping actually happen, potentially averting a catastrophic economic clash? U.S. Treasury Secretary Scott Bessent indicated that such a meeting was still on the cards. Let's delve into the details. According to Bessent, President Trump is still planning to meet with Chinese President Xi Jinping in South Korea towards the end of October. This meeting is intended to de-escalate the rising tensions between the two nations, particularly concerning tariffs and export controls. This news comes after a period of heightened conflict, triggered by China's recent decision to significantly expand its rare earths export controls. This move by China, placing restrictions on the export of rare earth elements, which are crucial components in numerous high-tech products, prompted a swift and aggressive response from the U.S. President Trump threatened to impose an additional 100% tariff on Chinese imports. This tit-for-tat escalation sent shockwaves through global markets and further strained the already fragile relationship between the world's two largest economies. But here's where it gets interesting. Despite this seemingly intractable situation, Bessent emphasized that lines of communication between the two countries remain open, with substantial discussions taking place over the weekend and more meetings planned. He stated in an interview with Fox Business Network that the situation has substantially de-escalated. President Trump, he clarified, postponed the tariff implementation until November 1st, signaling a willingness to negotiate. The planned meeting between Trump and Xi is slated to occur during the Asia-Pacific Economic Cooperation (APEC) Forum in South Korea. The prospect of this meeting alone had a positive impact, injecting some much-needed optimism into Wall Street. The news triggered a strong rebound in U.S. stocks, with the tech-heavy NASDAQ Composite Index jumping nearly 2% and other major indexes also experiencing significant gains. This illustrates just how sensitive the markets are to any signs of progress or setbacks in the U.S. China trade relationship. Trump's initial threat of tariffs caused a significant sell-off, exacerbating existing anxieties among investors and policymakers. Concerns were already mounting about a potentially overvalued stock market, fueled by a surge in investments in artificial intelligence, a boom that some fear could negatively impact future employment opportunities. The added pressure of the trade war only heightened these concerns. Bessent also revealed that staff-level meetings between U.S. and Chinese officials were scheduled to take place in Washington this week, coinciding with the annual gatherings of the World Bank and the International Monetary Fund. These meetings are crucial for laying the groundwork for a potential agreement between the two leaders. The 100% tariff does not have to happen, Bessent reassured, adding that despite the recent tensions, the relationship remains good and that communication channels have been reopened. And this is the part most people miss. The U.S. isn't just acting unilaterally. Bessent was quick to condemn China's actions as provocative and emphasized that the U.S. is pushing back aggressively. Furthermore, the United States has reportedly been in contact with its allies and expects support from European nations, India, and other democracies in Asia. This suggests a broader coalition forming to counter China's trade practices. China is a command-and-control economy. They are neither going to command nor control us, Bessent asserted, highlighting the fundamental differences in economic philosophies between the two nations. China, for its part, has blamed the U.S. for the escalating trade tensions, accusing Trump of hypocrisy regarding the tariffs. China also defended its export controls on rare earth elements, emphasizing its dominance in the market for these essential components. Under China's new regulations, foreign companies producing certain rare earth products using Chinese equipment or materials would require a Chinese export license, even if no Chinese companies are directly involved in the transaction. The U.S. has indicated it will reject these licensing requirements. Trump's tariff threat on Friday resulted in the SP 500 index experiencing its biggest one-day drop since April, demonstrating the profound impact of trade war rhetoric on global financial markets. But here's where it gets controversial. Some analysts argue that these periodic escalations and de-escalations are part of a deliberate strategy by both sides to gain leverage in negotiations. Are we witnessing a carefully orchestrated dance or a genuine risk of economic catastrophe? What do you think? Will this meeting actually happen? And if it does, can Trump and Xi find a way to bridge the gap and de-escalate the trade war? Or are we simply seeing another temporary lull before the next round of escalation? Share your thoughts and predictions in the comments below.